Hello and welcome to Behind the Charts. I'm your host, Dave Keller, here at StockCharts.com. Jon Markman is a fascinating man. He is a prolific author. He's written 6 books, including a 2009 annotated version of the famous classic book, Reminiscences of a Stock Operator, profiling the life and experiences of investor and trader Jesse Livermore. We talked about a number of things, but it was interesting to see how Jon got his start. It was actually in financial media. He helped create MSN, the Microsoft network. This is really one of the early websites dealing with financial information. So he really pioneered the way we look at things like earnings and financial data online. Now it's so widespread. He was one of the early practitioners that helped develop it. We talked a lot about the value of using charts in a process, but we also touched on a number of other things like relating fantasy sports to investing and so forth. One of the really interesting things, we recorded this interview in mid-February of 2020, and when I asked Jon what themes he was looking at, he talked in particular about the transition from physical experiences to streaming experiences. Now, this was when the coronavirus was still sort of early days, really didn't know the impact and what it was going to have in the United States. It turned out to be a very prescient set of comments, because this transition, the growth in stocks like Zoom and PayPal and others, really focused on streaming and online experiences have done incredibly well since our interview, and certainly coming out of the March 2020 lows. So Jon Markman is the founder and president of Markman Capital Insights. Enjoy my conversation here with Jon Markman. Hello and welcome to Behind the Charts. I'm your host, Dave Keller, here at StockCharts.com. Jon Markman is a fascinating man. He is a prolific author. He's written 6 books, including a 2009 annotated version of the famous classic book, Reminiscences of a Stock Operator, profiling the life and experiences of investor and trader Jesse Livermore. We talked about a number of things, but it was interesting to see how Jon got his start. It was actually in financial media. He helped create MSN, the Microsoft network. This is really one of the early websites dealing with financial information. So he really pioneered the way we look at things like earnings and financial data online. Now it's so widespread. He was one of the early practitioners that helped develop it. We talked a lot about the value of using charts in a process, but we also touched on a number of other things like relating fantasy sports to investing and so forth. One of the really interesting things, we recorded this interview in mid-February of 2020, and when I asked Jon what themes he was looking at, he talked in particular about the transition from physical experiences to streaming experiences. Now, this was when the coronavirus was still sort of early days, really didn't know the impact and what it was going to have in the United States. It turned out to be a very prescient set of comments, because this transition, the growth in stocks like Zoom and PayPal and others, really focused on streaming and online experiences have done incredibly well since our interview, and certainly coming out of the March 2020 lows. So Jon Markman is the founder and president of Markman Capital Insights. Enjoy my conversation here with Jon Markman. Ladies and gentlemen, we're here at the Money Show in Orlando, joined by a fellow Seattle area resident, Jon Markman. Fellow Seattle area resident, Jon Markman. Jon's the founder of Markman Capital Insights, the author of 6 daily newsletters and also 6 books. So a prolific writer. And Jon, thanks for joining us. Really appreciate it.
Thanks for inviting me.
I am looking forward, already anticipating when we get back to Seattle, we'll have you in our offices in Redmond, do some more talking. But
great.
This is a good opportunity to introduce what you do to our viewers. Can you just give people a little background? How did you get to this point? What's your general career history up until now?
Sure. So for about 20 years of my career, I was a reporter, an editor, and investigative reporter at the LA Times.
Right.
And then around mid-1990s, Microsoft was just getting its MSN Act together online, and they invited me to come up and help them start the editorial piece of what later became the Microsoft network and then became MSN.
Wow.
So I went up to Redmond and helped them start almost everything that we see today in terms of how earnings are reported online, how news is reported online, et cetera, was really started by us back in that 1997, 1988 period.
Wow.
It's kind of remarkable to understand that nothing has really changed that much online. The delivery has gotten faster.
Sure.
But 9/10 of what we do as analysts and as writers still ends up as black words on a white background.
Yeah, that's true, isn't it?
There were little exploits into attempts to use, let's say, macromedia, animation, et cetera, et cetera. But at the end of the day, we all just realized all you really need is smart, a good attitude about markets.
Right.
You need to be able to convey it well. And of course, we need charts, and that's where you guys come in.
That's exactly right. So about what year did you start really paying attention to the financial markets? Then early 80s-ish, or when?
So I was always sort of uninterested in the markets.
Okay.
Until my dad died, and my mom needed some help on understanding their finances and understanding the stock market.
Sure.
So I interviewed all of his stock brokers, and I realized, wait a minute, these guys are not that smart. I mean, it's not they were stupid, it's just like they weren't that smart.
Right.
I think I can do this myself.
I bet I could do this, right.
So I went to the library. They had libraries back then.
Yeah.
And I basically took out every book I could find about stock market and realized that I could use my mathematical background to create better models of the market than I was seeing from the brokers.
So your background, you actually studied mathematics or something in a mathematic-related field?
I didn't study,
Okay.
I don't have a degree in it, but I learned how to use math to a great advantage.
Interesting.
And there's no better way to use better use of a mathematical quantitative background in the stock market.
Yeah, interesting.
I use the same methodologies, by the way, for picking fantasy football and baseball drafts.
Is that right?
Yeah.
It's all the same methodology.
The market pays a lot
different data. It's right. I could see that being the case, right?
Yeah, I mean, you're always trying to use past knowledge to help predict the future. So in the sense of in markets, we use a regression analysis to say, all right, well, we've got these great outcomes.
Yeah.
What were the factors that were the most represented in getting us to that result? The same thing we do in fantasy baseball or fantasy football.
Yeah.
We know who these great players are after the fact, a year after they've created it. So what were the mathematical factors that were involved in getting, in realizing that great performance?
Right,
so on some level, there's, I could go on and on about that.
Yeah, right.
But the principles are the same for fantasy teams as they are for the markets.
So when you think about the market from a quantitative perspective, and you started in the early 80s-ish to now, how has that
I hate to say this, but it was actually the mid-70s.
Okay, mid-70s. Okay. So you started, secular bear market, pretty choppy. Then you 80s, all of a sudden we have the raging bull market, Dow going above 1,000.
So we've been super lucky in our careers.
Yeah.
Because we have had the opportunity to see a full-blown bull market.
Yes.
The mid-1990s to 2000.
Yep.
We saw one fantastic bear market from 2000 to 2003. Yep. We saw a recovery until 2008.
Right.
We saw another bear market.
Yep.
Tremendous bear market. And then we've seen another recovery.
Yeah.
So in our lifetimes, we've seen compressed a lot of the stuff that can happen to stocks, both on the upside and the downside. So we can reach back into our memories and say, hey, the psychology of the markets never changes, right?
Right.
There's never anything new under the sun. All the markets are about its psychology.
Yep.
So, and so having lived through those periods, both bull and bear markets, I think we're unique. You and I and our peers are uniquely capable of understanding how to invest now and how to invest for the next 2 or 3 years.
It's interesting, and you think about if anyone started investing in the last 9 or 10 years, they've known really nothing but a cyclical bull market within a secular bull market, arguably, right?
Yes and no. I think 2012, 2013, we had a near bear market.
Fair enough.
Market was down 19.8% at its worst, so they never called it a bear market.
But boy,
But it sure felt that way.
Had some characteristics of it, didn't it?
Yeah.
Right.
So we've seen some near death in that regard.
Yeah,
so
right.
Another thing that helps us prepare. And we saw a near death experience at the end of 2018.
Sure, that's right. Yep.
And again, that really helped us understand how to react the next time.
That's right. That's right.
Past always informs me, and I think should inform all investors.
So how has your process evolved over the years that you've been doing this? Have you added things to your toolkit? Have you taken things away from your toolkit? As the way you think of the markets quantitatively, is it different now than it was when you started? How would you describe it
I think all of my experience has shown that it's better to be a little bit more long-term oriented than short-term oriented. In the earlier parts of my career, I was more willing to scalp the market. I was more willing to do short-term trades.
Sure.
Because those are the kind of trades that pay the most.
Yep.
Both from subscribers as well as in the markets.
Yeah.
But as I've gotten a little bit older, a lot more experience, I've discovered that, it's the real money is made in waiting, in holding, not in selling.
Yeah.
That's a line from The Reminiscences of a Stock Operator.
Classic book, right?
Which I highly recommend everybody read.
We both agree on that.
I did in 2009, and Wiley asked me to do a annotated version of The Reminiscences of a Stock Operator.
No
So
kidding.
if you go to Amazon to get that book, get my edition.
Well, check it out. That's fantastic. It was in 2009 you did that?
It was in 2009.
Good for you.
Yeah.
That's fantastic. Classic book.
The book, it's easy to say that book is a classic.
Yeah.
But what's neat about what I did in this book, in the book, was I helped people understand what the reader in 1922 understood
Right.
when the book was published. So when they referred to a Black Friday, it wasn't the one Black Friday or Black Monday that we think about.
Yeah.
It was about the gold corner of 1876.
Right. Yeah.
Things like that.
Yeah.
Help people understand the interaction between World War I and trading in the 1920s.
Sure.
And I think the thing that really impresses you is that nothing changes. It's all about the psychology.
Yes.
It's not about earnings. It's not about inflation. It's not about the Fed.
Right.
It's about how people feel about those things.
So that's a really interesting point. Can you tell me, how do you incorporate sort of market psychology or investor behavior into how you're modeling things? How does it incorporate into your process?
At the end of the day, I think that you and Chip would agree that everything that's known about a particular stock is reflected in its price.
Sure.
So I really feel like, not to give you guys a plug, but I think
go ahead. That's fine.
that looking at stock charts really helps you understand the psychology of the market, of a particular stock or a particular market itself.
Yeah. Okay.
And when I look at the market today, I'm very unimpressed with earnings. Earnings are really flat to down.
Sure.
Last year they were down.
Yep.
This year they were supposed to be flat. They're a little bit worse than flat.
Right.
And yet the market's going up anyway. Why is that?
No.
Well, people are feeling good about the potential for the Federal Reserve to stay on the sidelines.
Yep.
And they are positively re-rating stocks' PE ratios.
Right.
So there's two things that make a stock go up: earnings growth and the growth of the multiple.
Right.
The growth of the multiple is with the psychology. How confident do people feel about the growth of this company? And so right now what we really have is people feeling more confident about the future, even though the present is kind of lousy.
Yeah. So when we think about behavior, I think it was Sir John Templeton, right, that I think his quote was a lot about the markets. Basically, the bull markets end in euphoria, right? There's this euphoric phase at the end when people just get crazy positive about everything.
Right. We've seen that, right? We saw that in 1999.
Well, so my question is, how is what we're seeing now in early 2020, how close are we? Are we showing any signs that would make you feel like we're in that last gasp phase, that euphoric phase, or not so much?
Despite the evidence from like a Tesla, where people are bidding it up way beyond its fundamentals, in general, the psychology of the market is actually very neutral.
Okay.
I would say sentiment is actually on the weaker side.
Interesting.
Yeah, I mean, that's what we see in the AAII data.
Right. Even bulls and bears, I think, this week, to be honest with you.
Great companies like, in the late 1990s when we really saw a blow off top, even some of the great companies were going at 100, 150 to 200 PEs.
Yeah.
Talking about the Googles and the Amazons, et cetera, of the world.
Sure.
We're not seeing that today.
Right.
Alphabet, I think the PE is around 25. Amazon, it's around 60, but they deserve it because of their growth rate.
Right.
Microsoft's only trading at around a 27 PE.
So overall, not crazy excessive, right?
It's not excessive.
Yeah.
It doesn't mean the market can't go down.
Yeah.
But for now, there's enough people who are worried about markets that are still on the sideline, still trying to get in.
Right.
And I think that's why I'm not really that worried about.
So here we're recording this early February 2020. Let's say you had a new set of assets that you needed to unleash into the markets. Where would you be looking right now for opportunities with new money, or what general themes or assets or areas would you be looking for?
Well, the greatest business theme of our lifetime is the digital transformation of business and human interaction.
Okay.
So whereas in the past, you used an LP, you bought an LP, put it on your record player, and listen to music.
Right.
Then you bought CDs. Now we stream. So streaming is a digital transformation from physical object to digital.
Yep.
In the past, we paid for everything by cash. Now we pay for things with a debit card or a credit card.
Right.
In the past, we went to movies. We still go to movies, but largely we've shifted from going to movies to having streaming content.
Sure.
And this is being writ large throughout business. So everything in business where you might have had physical forms to fill out in HR, now you fill out things digitally, or the company actually knows more about you than you know. So they just present this thing to you and they ask you to sign it.
Right.
The use of the cloud. I've been going to these conferences and talking about the cloud for 15 years.
Right.
But guess what? The cloud migration is by no means complete. In fact, it's just getting started.
Right.
You talk to a lot of big companies, so they're like, yeah, we need to have a cloud strategy. And I'm like, really? Now? After 15 or 20 years?
We're just getting there, right? Yeah.
They're just getting to the point where they feel like, yeah, we can offload all of our data offsite.
Right.
And then the ones who are already offsite, who have committed to the cloud, are now moving to the edge of the network rather than going all the way out to the cloud. So for instance, companies that need cellular data are putting their storage and their computational activities closer to cell phone towers.
Yeah.
To be closer to the data. So this transformation from the physical world to the software world is it's really the most important theme of our lifetime. And so what I do is I recommend, if you have new money, I think that's the area to focus on.
Got it.
And here's the thing about that. In order to do AI right, and artificial intelligence right, in order to be more successful with the things that require artificial intelligence, such as autonomous driving or the digital development of drugs, you need a lot of data.
Yep.
And who has data? Big companies. Who has the best data, the most data? Big companies. So I think you're seeing really a shift from small cap, mid cap oriented market that we saw in our early days to now a period where the big caps are winning. Why? Because the big caps are better.
Yeah. I mean, we're certainly seeing that in the charts. I mean, the OEX is breaking to new highs consistently, right?
Right. I mean, bigger is better. And, I mean, that may not always be the case. You could have a breakdown from that, in a month. But I think that's the theme right now. So I would be looking to buy things like Microsoft, Google, Alphabet, Amazon.com on the top tier, and then you have companies like Salesforce.com, which is really taking the move to the cloud, et cetera, into the enterprise marketing.
Yes.
As and I like Intercontinental Exchange, which has done a tremendous job of moving the financial markets into the future of the cloud world. Right. And I also like some stocks that people don't think about too much in this regard. Okay. But the consultants. Okay. Consulting companies like Accenture, HCN. Yep. Booz Allen, which is BAH. Yep. Are doing are the companies that, let's say that you're an airline, let's say you're Delta Airline, and you want to create a new baggage tracking system. Yeah. Well, you don't go out and hire 20 developers. Yep. You go to Accenture and you say, how should I do this? Right. And then Accenture both tells you how to do it, and then makes that assignment to its internal developers, or the developers that'll put on your site. So they have like 90,000 developers in Fortune 500 companies around the world. So Accenture is really the biggie in that space. Yeah. But I also really like Booz Allen, because Booz Allen does the same thing, but they're primarily focused on government. Got it. So if you like the e-file, instead of filing your taxes on paper, those are the kind of changes that are happening in the government cloud that Booz Allen helps with. I love this whole theme of digital transformation. That's such a great idea. Just to wrap up, where people are not familiar or want to learn more about your work, where can we point them to? Sure, they can go to markmancapital.net. Okay. And they can get my newsletters. I have two daily stock letters. I have a technology letter that's published by Weiss Inc. called Tech Trend Trader. Okay. I have two options letters. One's called Tactical Options, and the other is Counterpoint Options. Mm-hmm. And I have a futures service as well called Invariant. Fantastic. John, this was such a pleasure to interview. Thanks so much for stopping by. Have a safe trip home to Seattle. Thanks we will much. As well. We'll hope to see you there. All right. Great to see you. Here with Jon Markman at the Money Show in Orlando.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.